Octopus Investments CIO Lothar Mentel is with us. Thank you very much indeed for joining us today.
Good afternoon.
If we assume that there are buying opportunities out there, firstly, is that right at these levels, or should people still be considering it too risky? And if so, where they are?
It depends a little bit what sort of an investor you are. If you are a relatively speculative investor, then perhaps it's worth looking at the markets for the next couple of days, because we've just finished the week now on a high for the week at least, and as these corrections go, they go in waves, so we might not have seen the lowest lows yet.
Right.
If you're a longer term investor, definitely even these levels that we've now gone back to this Friday are very attractive from a longer term yield point of view. We've just heard it from Ian Barnett. I would fully and wholeheartedly agree with him. At the moment, we haven't got many signs that the economy is about to fall off a cliff. And on that basis, companies are very profitable and stock prices are very low.
Okay. Well, that's quite heartening news to hear you say that it doesn't look like the economy is going to fall off a cliff. I mean, clearly, if there was a double dip recession, as some people are concerned about, then we would still be buying possibly equities at too high a price.
Yes, that's always the problem, that obviously the earnings and the yield that you're seeing on the stocks is a bit of the rear view mirror. It's telling you what was, but not what is. But that's when you have to look a little bit more realistically at the markets. And this is where I'm also saying, decide whether you're a more speculative investor or a more long-term investor. If you're a long-term investor, then actually if it dips a little bit further, it doesn't really matter so much to you. It matters to you that over the longer term, you've chosen a relative good entry point. If you're a short-term investor, then probably you can play the volatility at the moment, and at least this Friday we haven't closed on the lows.
Now, tell me what sectors then, if you are looking for example, the longer term investment, that this would be a reasonable entry point, what sectors would work well?
I think if you want to buy at a particularly good discount at the moment, and the stock markets are one of those weird markets where we see people running away when the sale is on, so I would urge investors to see it as a sale opportunity. Look at those sectors that have fallen most, that have really been penalized. Banks, perhaps, if you look at them, technology stocks, all those that have fallen the most tend to then, in the rebound, rally the most. But those, you have to be careful, really. If you're a long-term investor, you want to have more of a diversified portfolio, really, than just any individual sector. So for the really long-term investor, I would say, think more about buying the broader market than just specific sectors.
Now, we've seen this ban on short selling. What effect do you think that it is having on the market? And overall, does it work?
It might have a positive effect in the short term. I think it's a bit late. Overall, short selling isn't the evil, isn't what's bringing the market down. What brings the markets down is that there are more sellers than there are buyers, and whether you've got short selling or not doesn't really matter that much.
In fact, there's an argument that actually short selling prevents so much volatility in the market.
Well, that's where I would probably like to differ. Particularly when you hit a very volatile environment, these financial instruments can increase the volatility and the momentum that's going into one direction anyway to more volatility than you would otherwise see. So while I'm not an advocate of ruling out short selling, abandoning it, I would probably support a short-term banning of short selling if that brings down the short-term volatility and brings markets back to calmness. But I'm talking weeks here and not any longer.
Okay. When we look at other things, for example, corporate bonds, are there any other areas that investors should be looking at the moment?
Yes, I think at the moment the stock markets are very much capturing every investor's interest, but there are other areas that you need to look at as well. So if you are an investor who has got a balanced portfolio, then you also need to look at your bond part. And in the bond part at the moment, we're quite concerned about corporate bonds. Because corporate bonds at the moment look a bit vulnerable, because if the markets are right and we have a slowdown in the economy, then the credit spread at the moment probably are too tight and they're going to widen, which is going to damage bond values. If that's not true, then sovereign bonds at the moment are priced wrongly. They're yielding too little and they will go up. But if you have got tight spreads, then so will corporate bonds again. So it's a lose-lose situation, it seems, for corporate bonds in this environment.
Right. Now, if you do want to put your money elsewhere, currencies at the moment do seem to be quite volatile as well. Gold is very high. Are there any other places that are good for money?
Well, on the speculative end, I would just say watch the markets as they evolve.
Okay.
If you see markets coming to new lows, those may be your opportunities to get in and make a good return on the short term. But be aware, it goes in waves and it goes for a while in this volatility, I'm afraid.
Okay. Mr. Mentel, thank you very much
Thank you very much.
for all your insights there. Now, still to come.